Hi, this is Ben Poole for Finextra, and I'm joined by Penny Hembrow from CGI to talk about some of the major trends in banking. Thanks for joining me, Penny.
Thanks, Ben. I'm talking about the results of our strategic planning process, where we go out and we interview over 1,000 of our clients every year to talk to them about what are their key trends in the industry, what are their business implications of those key trends, what are the IT priorities, where do they see innovation coming from in their industry. And I'm particularly going to be talking about the 133 interviews that we did with banks this year, and they're split between retail banking, corporate and transaction banking, and capital markets.
And so what are the big industry trends that corporate and transaction banks are talking about today?
Well, first of all, they're talking about the complexity of operating across multiple jurisdictions from a regulatory perspective. And so they're finding that the cost of compliance is increasing significantly. And I think there could well be pressure in the market to see, particularly as they want to service their corporate and institutional clients worldwide, as if there is a way that they can harmonise the regulations around the world. And then over and above that, there's two then competing trends. One is from their customers, so the corporates and institutionals, who are in fact behaving rather like retail consumers. So they're driving aspects of changes in the services and in the way that they're serviced, so particularly using digital technologies. And then the other side is that we're seeing new innovations and changes in the marketplace, such as real-time payments, ISO 20022 coming in, which are changing the way that the industry is having to compete. And so as an industry, where historically this has been the area where the banks, the universal banks, have felt they can get a superior return on equity because of the lower capital costs, instead of being able the freedom to do that, what they've now found is that every other bank is doing that, and so competition is intense.
And so what are the business and IT implications that people are looking at as a result of these trends?
So when we talk to the business people, one of the things they're saying is we have to innovate our services. Gone are the days where we can offer stovepipe products to our corporates. Gone are the days where we can expect our corporate clients or our institutions to manage our own processes in their own shop. Corporates and institutions are expecting the banks to help them to make the servicing as streamlined as possible. So we're seeing a big increase in innovation in services, particularly cross products. We're seeing a big increase in terms of portal development, cross-product analytics going out. But what they're also saying is that corporate and transaction banking has often been the poor cousin in the budgeting within a bank. And that's stopped now, but they're saying in order to get better value for money, the business and IT and operations need to work together to streamline processes, to reduce costs, and make sure that legacy is modernised. So corporate and transaction banking have significant legacy infrastructure and very piecemeal. They often grew up with systems and operations in each of their main geographies, and they're bringing those together. And therefore, at the same time, what they're doing is creating business services, or some people call these business utilities, where the business can buy a service, a common service, on a pay-as-you-go basis, pay as a service. And we're seeing significant increase, particularly around areas like trade finance, like payments, KYC, so areas like this where people want to buy the service at a way that is value for their business and where they can improve their return on equity.
And so looking 2 or 3 years into the future, how do you see this digital transformation continuing to impact corporate and transaction banks?
Well, I think it could have a number of different options out there. So if we take the trend that banks increasingly are creating business utilities inside, you could see that going further and further so that they actually compete on the servicing to the corporates and institutionals. So they would become much more of a market-facing organisation, and I can see that the way that back offices are run, IT and operations, changing significantly, particularly using third parties, particularly as well as some of the services standardise, and as we'd see real-time payments and the way messaging is done across the market also become mature and standard. That's one side. The other side is that there would be so much competition that, just as we've seen over the last couple of years, the number of banks servicing this market continued to increasingly specialise and only service certain geographies and certain types of corporates and institutions. And if we see that the market share of banks in the corporates and institutions is in fact falling, they're already having to go out and get new banking relationships because of that pullback from certain geographies or products, then that could mean, in fact, we could get a rash of new competition, new entrants coming into the market and really making this a very, very competitive marketplace, potentially with a whole new set of players.
Penny, thank you very much for joining me.
Thank you, Ben.